Hello there. Thanks for watching. This is Matthew with Forex-Nation.com. You're going to go ahead and get a little bit, hopefully, better description of my trade setups because I've been watching a few of my videos and noticed that I seem to be a little vague or a little, I don't know how you put it, not much meat to my analysis. It just kind of seems like I'm throwing in some indicators here and there and showing you how they work. I want to just go over some details here and be specific and hopefully inform you. And I said in my fundamental analysis that since last week was such a strong downtrending week, and I would expect the same out of this week due to the fact that the Eurozone is still weak even after this new bailout package they came up with over the weekend. I still think the euro is extremely weak. The market does not have confidence even in this new package. That means that the Fibonacci lines, your moving averages, and of course traditional support, resistance, and trend lines are going to work great in these kinds of markets. And let's just get right into it. After price action initially spiked here during the Asian session, and this huge spike created a tail, and you want to look for tails when it comes to drawing fib lines. You need a point A and a point B, and those need to be swing points. Well, those swing points are swing points, especially when there are tails, long portions of the candle that cause what's called a tail, basically. And you see them here, and those are usually indicative of a price action reversal. So we had one created here. And now what we do is we wait for this thing to finish its drop and start to retrace, which look at the tail and look at the retracement. So when this happens, I draw my fib. Now, here's how I did the fib. You could have drawn it from here to here, and that would have been according to the book. But tons of traders out there do things a ton of different ways, and you can't rely on your one way as being the most likely way everyone else did it. And if you want to really be technical about it, it should be from the most recent high. So we could actually move, instead of this high, we could move it down to this high. When I did that, here's what I noticed starting to happen. I noticed that price action went right up to the 38 here and here in this area, failed to break it, and then bounced back down off of it, looking like 38.2, which is a popular level, was resistance. And not only that, it did it again right here. Once that happened, I felt good. Once this bounced back down, I felt good about entering a sell order, and I did. I entered my sell right here on this candlestick after the bounce. That's 3 times it could not penetrate a popular level of Fibonacci resistance. So I entered a sell trade, and it came on down, and I closed the sell trade out by following along. Let me get rid of those fib lines so that you can see this really clearly. Hold on one second. The way that I do my trailing stops, or my way of locking in profit and leaving the door open for more, is I put it right behind the previous candle. So I left it behind this one, I left it behind this one. That's the stop loss I'm talking about here. That locks in profit because, you know, I entered up here, and then I put my stop loss down here, locking in this profit. It doesn't go against me, it falls farther. That's cool. So I lock in that profit. Doesn't go against me, falls farther. That's great. I lock in that. We're talking bonus here. And then even when this happened, it did not come up above here. So guess what? I just leave my stop loss there, let it drop some more, drop my stop loss down. Right down in this area, I went ahead and took profit. Discretionary move. I was kind of thinking that we would see a rally. We didn't see much of a rally, but there was one. And I got back in, which is the current position I'm holding open right now. I got back in on this rally here. And the reason I did that was, again, based on Fibonacci. The way that I drew my line, most recent swing high to most, at the time, the most recent swing low being right here. And what ended up happening was I noticed that price action came up to the pip, to the 50 level, one of the popular 3 levels of resistance, and bounced back down strongly. And I just chose to go ahead and enter once that had happened right here. And as you can see, it's gone down ever since. As the market stands right now, I mean, according to Fibonacci rules, if we go up to the 38.2, which is where the body of these candles kind of stalls out at, then we should go down to the 138.2. And as you can see, it's exactly what happened. Okay, so it's obeying Fib rules. The next question is now, and the reason I haven't closed my trade, I want to look out at the larger time frames here and show you my thinking and where I think this currency pair is headed. If I go out to the hourly, I've got a couple of things going for me in terms of leaving this trade open as a sell. Number one, we've got the crossover on the alligator. Okay, that's a great sign that momentum has shifted down. Number two, need I mention what went on last week? I'm going to zoom out to the 4-hour chart. Hello. That's the strongest downtrend I have seen in the euro dollar, I think, since many of the biggest market crashes ever. I mean, that is not, I wouldn't even call that a downtrend. I'd call that a collapse of a currency, dropping that much. So, obviously, we're weak. Obviously, I don't have to state that too much if you're following along. So, I'm also factoring that fact into my analysis. The other thing is, in strong downtrending markets, which you'll see if I go back to last week, this red moving average acts as a perfect spot for resistance and for re-entry. You can see when price action falls, it either stalls, moves sideways, and comes to meet the red moving average like it did here, or it'll come away from it, and then it'll come up to it, and then that's all that she wrote for the rally, and it'll drop back down, and then rally up to it, and then drop back down, and then rally up or come to meet it, moving sideways, one or the other. And I think what we're going to end up seeing happen here is this thing's probably going to want to move sideways and meet this red moving average, because I don't know, I haven't heard of any. I've been, up to this point, I've been paying a close attention to the markets in terms of what kind of orders are out there, what kind of rumors are out there. And look, basically what it boils down to, and I'll wrap the video up here, if the Eurozone does not come out with some more strong statements, some confidence building statements or facts, if they don't just basically come out and say, hey, look, there's not as much damage being done, the deficit cuts are not going to be as large, there's a lot more money somewhere, I don't know what they could honestly say. But unless there's something coming out that surprises the market and gives the market more confidence, I think we're probably going to go ahead and fall again on this pair. So I'm going to leave my I'm going to leave this order open, and I'll show you kind of how I'm using my stop loss here. I need to actually move it as we speak. I'm using this red moving average as resistance, and as you can see, we've come up to it, so it's questionable right now. Is this thing going to go ahead and rally, or are we going to get away from the red moving average? It's low liquidity right now because right now, 6:45 Eastern time, means Asian markets are about ready to open up, but there's not much going on in the Forex market right now, so I wouldn't expect to see anything anyway. I'm just going to leave my stop loss where it is, but I'll probably lower it a little bit more if we see this thing come on down, because if we see this thing come on down, especially if we break this level right here, then that's going to mean we're going to see a continued sell-off. If we see this thing come down and reach this level here, I'll start to tighten my stop loss, because that could mean that's the end of it. We'll bounce back up as a result of being at a key level of support, which is what this is, and I'll just go ahead and call this level of support the 2763 level. So once it gets down to that level, I'll either lock in profits more closely, expecting a bounce, or hopefully it'll just break down through there and it won't put any pressure on me at all, and we can continue to add to this position. I hope that helped with the Fibonacci and with the moving averages. If not, feel free to leave some questions. I'm here to teach. So yeah, as you can tell, I'm a geek about this shit. I love it. So leave me comments or questions. Thanks.